Alright, this is Sean for Strategic to Tactical. In this segment I will go over the major indices. It is the 30th of August, Saturday, and I'll go over the S&P, NASDAQ, Russell 2000, and I will even go over the junk bond index. So without further ado, we'll start off with the S&P 500, right? So we kind of came in on Monday. On Friday, I had a market extreme bearish indicator, and my focus was if we trade below Friday's low, we might get some more sellers in to get a little bit of a retracement and see where the market finds some support. But lo and behold, we come in Monday and the market's opens higher, and then actually blasts through this Thursday's resistance, which was also a level that I was looking for. So we broke up higher, broke above 2,000, and then on Wednesday I got another bearish indicator. And again, I hate to necessarily use the word bearish, but it's really just telling me risk reward wise, it's chasing, buying up in here is just not a historically not a good risk reward type of situation. And sure enough, this time it kind of market stalled for at least these 3 days here. Actually took out a prior day's low. But really, every day that the market would penetrate lower, it would close pretty strong. Even if when it gapped lower on Thursday, it closed actually pretty good, right? And that sort of foreshadowed the strength on Friday. Even though this business in Ukraine started to get the headlines again, the market just shrugged it kind of off definitely on Friday. Now again, that was the end of August, going into a holiday week, which is usually, it does have a tendency to be bullish, especially if, the prior weeks have been bullish. So take that with a grain of salt. Plus, volume obviously hasn't been there this past week at all. So again, take that with a grain of salt as well. Another thing of note here is this is the 8th day, and since the really that first day of this move, we have not closed below the 8th day. Since basically the 8th of August. We've just tried to penetrate it here on Thursday, but closed higher, and then obviously closed a bit higher on Friday. So the key going into next week is going to be Tuesday's high of the past week, which is 2005 in S&P cash, and the first layer of support is going to be, first layer would obviously be Friday's low, and then Thursday's low would be next. So really I'm looking at Thursday's low as a much bigger level at 1990. It also corresponds to this breakout level, which was at as high as 1991. So that's going to be, I think, a much bigger area of support, or more important level, if you will. Plus, close below the 8th day would be the first in about almost a month as well, if that happens. And if we take out the highs, and again, the key is going to see where does momentum come into this market. This I think on the index side, that this kind of move had been kind of frustrating, especially on the shorter term time frame. There's been a lot of a lot of intraday whipsaw, so it hasn't been the easiest to be short-term play and long in this area. Even though if you look at it, wow, that's a great move, and so the strategic players, guys with a little longer time frame, definitely I think had a better, a little bit potential better action, as they weren't sort of whipsawed in the shorter term action. So another area of note here, just that since we broke these highs, we broke out above these 1990 area. I just put a 2.618 Fibonacci target. Right now I got a 2128. I got a 1.618 target at 2043, and all that is a difference between this high this low, and then I'm multiplying that Fibonacci ratio to get and adding it to this low to get these target prices. Just something to note here, this is a tactical target, 2128. If I switch over to the strategic level, this is an S&P monthly chart. Here you can tell this 10 years of basically nothing. Well, actually it's more than 10 years, but anyway, my point here is that once we broke above these levels, that we broke above the high of '07 and the tech bubble high, I basically did a same thing, Fibonacci target levels, and I got a 1.618 target of 2138 between the highs of '07 and lows of '09. So that was just pretty interesting when I did the tactical. Target 2128 and 2138. It's only 10 points apart here, so that's a pretty interesting situation where potentially the strategic and tactical kind of lining up, at least here. But again, I'm not going to predict that this is going to be the target in this bull market, but just something to put in the back of your head. So anyway, let's go back to the tactical level. Yeah, so again, we're kind of been sort of, at least this is sort of a week of consolidation, even though we just broke a little bit above and then we consolidated above that level. So I mean, it's real healthy action, no doubt about it. An interesting thing though that may challenge. Obviously, what everyone's focused on here, and so far the market shrugged it off, is Ukraine, the geopolitical risks, yada yada yada. In fact, if the latest is, hey, we're close to the point of no return. This is CNN. So this is these new developments where it's basically like, all right, the cat's out of the bag. Russia's basically invaded Ukraine, and that's where we're at. So that may pressure the markets, obviously, going into Tuesday. Again, Tuesday is far away. It's still far away, being that Monday's a down day, at least for the U.S. markets. So we'll see how the other, worldwide markets handle that. And again, our futures may actually open a bit lower. But again, that's all good. It'll be a test to see, I mean, if this market really is as strong as it looks, it should shrug it off again. It should buy, basically open at the low, give us another nice bargain price to buy it, and then the market should then be off to the races and take out the highs. But we'll see how, again, news is a great way to test to see the real underlying strength or weakness of any type of market move. So that might be something that we'll have to take a look-see on Tuesday to see how things react to the geopolitical news that's been coming out this weekend. So without further ado, that's the S&P, and that's really the main market that everyone follows. But of course, the Nasdaq is pretty powerful too, especially since it's been the market that has been relatively strong, especially the past month. Is well above these breakout highs here, and actually on Friday pretty much closed at a new high, and basically shrugged off this, these market extreme bearish bars that I had in here. Just said, yeah, whatever, I don't care if the oscillators are maxed and whatever, people is calling it overboard, we're just still going to tick higher. And again, that's more than likely the pain trade. I think there's a lot of frustration out there. People who are just not, still looking for a market top, looking for the correction, positioned for it, not positioned for another leg higher, and here we, potentially go. So something to keep in mind. Same thing here. 8-day hasn't closed below the 8-day. Even, this is even stronger. I don't think the low has penetrated the 8-day in almost a month. So. Something to keep an eye out for the remaining, into next week, to see if that continues. I'm trying to find the Russell. Here it is. Okay, this has been the red-headed stepchild, And I apologize, I don't mean to say it like that, but my dad's got red hair, so don't mean to insult him. But anyway, so you know, this is what the bears have been hanging their hat on as far as you know, oh, look at the Russell, look at the Russell, you know, again, yeah, okay, look at the Russell. It's, you know, it's kind of broken this down wedge here, and it's actually quite a bullish pattern, you know, even though it had obviously isn't at new highs here, but, you know, this is not a blaring sell to me. In fact, once it broke this wedge here, it's actually quite a bullish pattern, and has actually followed through so far. I mean, here it's riding this pretty steep uptrend. Same thing, you know, it hasn't closed below the 8-day. So you know, one thing it did this past week is break above this 50% retracement level from this high to this low. It caught resistance at the 61.8% area, and now it's sort of been consolidating here. So if it breaks above, you know, Wednesday's high, you know, next level is, you know, challenging these highs at some point here. So again, nothing, you know, and if we break out, you know, we go out here a you know, longer term time frame here. I mean, okay, so you know, Russell's basically been in a sort of consolidation pattern now, basically all of this year. Okay, so not a big deal. It's taking a rest after this impressive move here, right? So I mean, that's if you're a bull, you know, or at least looking at it from a different perspective, you can that's your argument as well. So so again, we'll you know, keep an eye, like I said, closing below the 8-day, breaking below this uptrend here might change the composure, and it'll be the same for the S&P and the NASDAQ, right? At least short term. Something I've been taking a look at, I sort of noticed that the junk bond index has been sort of leading, at least in the latest move, by a day or so. The equity markets, it kind of led the down move, and then it also led the recovery. And I mean, just one thing to note here, you know, we just don't have a new high. We haven't been able to break above the highs like the equity indices have broken their highs, except obviously the Russell. But and that might be something said. There's definitely a little bit of correlation, you know, I guess, between, you know, speculative small cap stocks and junk bonds, right? So especially, you know, I assume small caps and junk bonds will do much better in an economy that's firing all cylinders, and obviously that may not be the case. There's, you know, there's sort of some debate out there that we may be weakening, especially when you see the treasuries continue to make lower. You know, the long-term treasuries continue to make their rates keep going lower and lower while people are dumbfounded, right? So anyway, so again, it's potentially consolidating here, nothing new. I mean, the key thing here that what we'll want to watch in this junk bond index is any type of move like this, right? Some big, like, oh shit moment, you know, especially on the downside, you know, and especially if you look at, compare it to the stock indices, and this thing, you know, does one of these type of days, and then they kind of might be a little weaker, but nothing. The volatility is nowhere near like this, and maybe again this thing might be a day or two ahead, right? So just something to keep an eye out for, and even if this continues to go higher, just say, well, all right, you know, it's doing what everything else is doing. So again, without further ado, I will do a follow-up video on the tactical setups for the week, and that's all she wrote. Thanks for watching.